welcome. Well, the trading week, that's winding down really fast right now, but here's what you need to know today. Cocoa prices dropped from a record high of $12,900 a ton in December 2024 to a dip below $8,300. Is this just a temporary dip or the start of a sustained downtrend? And in Kenya, President Ruto backs high-risk industries with 20 billion shillings. He's saying to investors, if it's not safe, we've got you covered. If Tanzania eases the burden, the Energy and Water Utilities Regulatory Authority trimmed petrol prices by roughly 2.3% in August. And it's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the commodities there. We see on the screen it's still green at this point, falling from this morning, but still below yesterday's prices. We're at $68 yesterday, so it's a pullback, but we're seeing some of those losses that are being paired. But WTI, that's lower, $64.88 a barrel, up 0.82% today. So there's still a lot of expectations around the market there. Both benchmarks, they did fall a lot recently there, about 1%, touching their lowest in 8 weeks after comments from President Trump and progress in talks with Moscow. So investors still keeping an eye there. So we're still seeing that trading ban with oil. Let's get a check on metals now. See gold prices edge higher, aided by growing safe haven demand after a fresh tariff threat there from U.S. President Donald Trump. Again, it's Trump all the way, and it's all green with most of the metals we track. And we see the biggest mover there outshining the others. Spot silver, $38.72 per ounce, 2.16% up. Not at $40 yet, but I see we're moving there. 1.43%, that's for palladium, $1,164. And we see the likes of spot gold there up 0.40%. And the U.S. gold futures up 0.60%. Well, let's get a check on other commodities now. See cocoa prices topped out an unprecedented $12,906 per metric ton in December 2024 before retreating to around $9,000 per metric ton in January 2025. As of late July 2025, prices had sunk to approximately $8,245 per metric ton. That's about 36% decline from the peak. Despite a modest rebound in early August, the trajectory reflects both fading supply concerns and weakening demand. Well, joining us to discuss this now, we have Toju Megasin. He's the analyst with financial derivatives company. I call him Tolu Megatron. Hello, Tolu. Great to have you.
I'm good. Good afternoon, Nadi. Thanks for having me.
Yeah, so what are the structural and seasonal factors, that have caused these cocoa prices to collapse, so sharply? We know those are the reasons at this point, but despite ongoing concerns, over West African weather instability and shifting global demand dynamics, we're still seeing this price drop. Why is that?
So as you highlighted earlier, at the later end of 2025, we actually experienced the highest price level for cocoa in history, which was around 12,000. And this was driven by crop failure, as they experienced bad weather, excessive rainfall, and a large amount of drought as well. So that attributes to that. At the start of 2025, we've actually experienced better weather conditions, which have enabled adequate cultivation for cocoa and better cultivation for cocoa.
All right, so, given that, cocoa futures were trading near $8,900 as per metric ton, that's for mid-2025, well above the 5-year average of about $3,558 per metric ton. What would a projected fall of $5,775 per metric ton in 2026, what would that mean for Nigeria's export revenue, or do you see no change there?
We'll definitely see some change, as cocoa is definitely an export that we look to contribute to the agricultural sector. So the lack of FX in regards to this price fall would definitely lead to further depreciation in the naira, as well as. Sir, could you repeat that again, sir?
Yeah, what does that mean for revenue at this point?
Oh, so that will obviously lead to a reduction in revenue as long as we aren't able to, unless we are able to, sorry, increase production levels and increase volumes of exports. That's the only way I feel we can see an extra push or an extra contribution in regards to GDP and in regards to the government revenue.
Right, because we know
export.
the attention mostly is on oil, at this point. So it almost seems that maybe we might not notice, that change. But I guess we have farmers here that are trying to export most of the cocoa at this point, even though we should be turning cocoa to chocolate and exporting finished product. But thank you so much, Toju Megson there, for bringing us up to speed on what's playing out with cocoa.
Thank you.
All right, let's get a check on other stories now. We see President William Ruto has announced a 20 billion shilling government initiative to provide concessional financing and equity injections aimed at investors operating in high-risk industries. The package is intended to unlock investment capital in sectors deemed commercially sensitive, reinforcing Kenya's push to attract capital and de-risk strategic industrial projects. And in Tanzania, they've enacted its third monthly fuel price cut, lowering petrol to about 147 KN shillings per litre. Diesel, that's 144.40 KN shillings per litre. Kerosene, that's 143.94 KN shillings per litre. That's in Dar es Salaam. A drop driven by falling global oil prices, a stronger Tanzanian shilling, and reduced port premium. So they're enjoying lower petrol prices right there in Tanzania. To other matters now, the African Development Bank and its partners have secured a substantial $2.2 billion to fund Phase 2 of Nigeria's Special Agro-Industrial Processing Zones, that's SAP, spanning 24 states, announced by the outgoing AFDB President, Akinwumi Adesina, at the 2025 Standard Chartered Bank Africa Summit. The investment aims to transform Nigeria's agricultural sector, enhancing food security, boosting local production, and creating thousands of jobs. And I've seen Nigeria previously launch SAP's Phase 1 across 8 states, setting the foundation for the ambitious expansion. And in an exclusive interview with Channel TV correspondent Innocent Samosa, the global CEO of the Chartered Institute for Procurement and Supply, that's SIPS, Ben Farrell, warned that President Trump's proposed tariff hikes could significantly disrupt global supply chains, with African suppliers and manufacturers likely to be among the hardest hit. Speaking on the sidelines of the CIPS African Conference, currently underway in Johannesburg, South Africa, Farrell also praised the resilience of Nigeria's economy. Take a listen.
Thanks very much. I was so pleased to go to Nigeria. It was the first time I personally had the opportunity, and actually the first time the chief executive of SIPS has been there, and we had such a brilliant reception. We signed a memorandum of understanding with the Bureau of Public Procurement there. I found some amazing people there. The Director General is a great supporter. He's a highly dedicated professional in terms of procurement, and we then met the most senior people in the Nigerian government, and they're all committed to what we started to describe as creating the Dubai of Africa in Nigeria. And their recognition is, as you're describing, the connection across Africa. The booming Nigerian economy will have such an impact across Africa, and there'll be lots, of upside for the remainder of Africa. So completely, it's an opportunity for everybody. And I think, resilient economy, there was a, good question that we were talking about. To what extent can we get internal investment into Nigeria as well? And that's what SIPS is going to help with by creating, highly proficient procurement professionals, building the capacity and professionalizing procurement more and more. You can see it happening there. You'll get more and more opportunity for people to think this is a great place to invest, and then it, fuels the economy, and that will help across the whole of Africa.
All right, that's Ben Farrell there. He was right at the SIPS Africa conference. All right, let's get a check on what's playing out with the markets that we track, starting with on the African continent, and it's positive, still positive, at this point. We see the NGX and the positive territory, 0.51%, and 146,000 still on price discovery there. These two markets in price discovery at this point. Johannesburg Stock Exchange, that's still sitting on 100,000 level. That's for the All Share Index. Not sure if it's comfortable there fully, but 0.53%. All right, let's turn our attention to this market. That's the Johannesburg Stock Exchange. That's also hitting new highs. Let's talk to Surfas Badenhorst. He's a lead portfolio manager, Western Cape Momentum Securities. It's great to have you on the show. So, looking at the NGX and the Johannesburg Stock Exchange, at this point, I don't know who is copying who, at this point, but they're both at all-time highs, and I guess they're chasing higher highs, at this point. What factors would you say are contributing to the Johannesburg Stock Exchange All-Share Index, reaching this historic 100,000 point milestone?
Well, I think on the JSE, it was quite prevalent to see that the mining companies actually had a major boost the first 6 months of this year. So I think it was quite common knowledge that the market was expecting the US dollar to weaken. And with the Fed actually not cutting interest rates, we saw the opposite. So the US dollar staying stronger, and then obviously the rand, the commodity exporters gaining from that as well. So definitely the mining companies keeping the all share at around 100,000 points. We've seen some of the gold stocks as well as platinum stocks do more than 100% for the last 6 months. So definitely one of the reasons why we're up there.
All right, and happening around the Johannesburg Stock Exchange. Another one, there's an exploration of the Johannesburg Stock Exchange trading 24 hours. That's 24 hours a day. That's non-stop trading to the next day. What do you think is motivating, this move here?
I think the motivation is just for the JSE to stay in touch with market trends. We've seen the New York Stock Exchange as well as the NASDAQ, as well as the London Stock Exchange apply for extended trading hours. And technically, if you think about it, the world is trading 24 hours a day. If the JSE ends, the American market opens. If the American market closes, the Asian and Australian markets open. So it's just a way of staying on top of things, and especially with a lot of dual listeds that we're seeing on all the exchanges, it might be a good thing for the world actually to get into that rhythm.
And do you think the stockbrokers can keep up with 24/7, 24-hour trading?
Well, hopefully the development of AI and also electronic measures would mean that human intervention would be to a limited extent. So hopefully that will come with all the new developments.
And there's also the JSE Trade Explorer Analytics platform. Tell us about that and how this, will impact investor demand and market gaps right now.
I think in essence, what the JSE is trying to do is just to make sure that there's more sophisticated data available to investors. I think the market depth and breadth is quite important. And especially from an investor or a retail investor point of view, information is sometimes very delayed, or not all information is available. And I think what this new developments will do is actually help close that gap between what is happening real time in the market and what is being portrayed to the world outside.
And looking at some of the stocks that have done pretty well in the first half of 2025. That's on the Johannesburg Stock Exchange. What are you seeing for the second half? Which sectors do you think investors should actually be shifting focus to? Is it the laggards or maybe the ones that have already gone up at this point, like the likes we have on the screen there? We've seen MTN Group, that's up about 53% already year to date.
Well, I do think I'm quite a momentum bull, so I will stay with some of the winners that will probably continue to win. But obviously the Trump administration making it quite difficult to see what the policies would be. But I would not exclude some of the likes that has been some of the losers. I think SA retail have a lot of potential and definitely undervalued. If you look at stocks like Mr. Price, Shoprite, Truist, definitely some upside potential in those stocks. So just make sure it's a decent balanced pick that you use with some of the winners that will continue to win and some of the laggards that will actually try start catching up.
We keep hearing, news about ShopRite divesting, from some African countries. I think the latest is Ghana. There's some kind of prospect there of them divesting from there. Is that a negative for the stock?
I don't think so. So the reason why disinvestment happens is exactly to be more streamlined and more focused in the markets where the company is actually on a good foot. So in all essence, it's actually cutting out some of the rotten apples and then focusing on the profitable areas of the business. So definitely more a positive stance than a negative one.
So are you saying the business in Ghana is a rotten apple? You don't have to answer that. Thank you so much. Thank you so much, Surface. The Surface is Badenhorst is a lead portfolio manager at Western Cape Momentum Securities Middle East. Thank you so much for coming on today.
Big pleasure.
All right, let's get a check on all the markets. At this point, we see stock futures, they're up. That's in the U.S., led by tech. And as President Donald Trump unveiled new chip tariffs that include broad exemptions there. Futures tied to the Dow Jones Industrial Average at about 247 points. S&P 500 futures, the tech-heavy NASDAQ there, they're all in the green. 0.79%, that's for NASDAQ. We'll see if, just tomorrow left. We'll see if 24,000 can hit before then. Let's get a check on markets in Asia. Now let's see the picture there. Did start off green mostly this week. Just little issues there with the Nifty 50. If we're looking at Asia, Japan's Nikkei 225 benchmark, that was about 0.65% to close at 41,059 points. Hang Seng Index 0.69%. So we're still seeing green there. Other parts we track, Nifty 50 managed to close there with 9 basis points at 24,596. There's been a lot of pressure there for the Nifty 50 most of this week. And we see Middle East. It's mostly red there. UAE, Dubai, 6,145, 0.17% down. Let's look at Qatar and Saudi Arabia. We see Qatar there managed to stay up at intraday, 11,363, up 0.33%. All right, let's turn to Europe now for an update on the markets there. We have Varda Emrak. Great to have you, Varda. What's the market saying in Europe right now?
Hi, thanks for having me, Laddie. It's relatively quiet Thursday here, with DAX gaining more than 1.5% at the moment, the Euro Stoxx 50 also rising 1.4%, and the Pan-European Stoxx 600 touching 0.85% gains. Some big winners in the DAX were largely energy companies, healthcare stocks, and even German car makers get a break. So it's looking stable. Maybe it's the summer lull and there are no major drivers in the market today. And so there does seem to be a tiny bit of lack of direction. That's what analysts here in Europe are saying. Eyes are on the central bank decisions coming up after the Bank of England cut interest rates to 4%, which puts the cost of borrowing at its lowest in the last 2 years. And it also raised the UK's 2025 outlook. It seems whispers of a meeting between Donald Trump and Vladimir Putin also is keeping investors here interested, because a ceasefire or a de-escalation of any kind in the Ukraine region or resolve would be very positive for European markets.
All right, Varda, I'm wondering at this point, do you think there'll ever be a week we don't have to talk about maybe President Trump and tariffs, but it's Tariff Thursday and the start of the U.S. placing levies on both allies and rivals. How's it looking there? Is there clarity on what the EU-US deal entails?
Yeah, I laughed at your initial statement because it seems that there are no days when we're not going to talk about Donald Trump. But the situation here in Europe remains tense and somewhat unclear. Now, despite the earlier agreement and the handshake between Donald Trump and EU Commission's Ursula von der Leyen, there is still no formal legally binding agreement in place. And this adds some anxiety among businesses here. In fact, EU exporters say they are still facing the 27% tariff rate, which was meant to go down to 15%, initially expected from August 1st, but it seems that it'll go into effect later today. German cars are also being tariffed at the moment at the higher rate. And just a day ago, Donald Trump threatened more tariffs on the EU if it did not comply with the investment promise of the deal. So while this initial agreement calmed fears of a potential trade war, the new phase comes with uncertainty on what this agreement actually is and how it's going to be implemented moving forward.
All right, I guess we'll keep watching that. But there's also the energy purchasing agreement. How are energy companies reacting to that?
Exactly. So there's two more parts, right? The billions worth of investment in the US, and this is infrastructure, and then billions worth of energy that the EU promised to import. Now, both are big, fat, and somewhat unrealistic promises. And here's why. The US, may not even be able to produce and export that much energy. That's what CEO of Germany's largest energy company, RWE, said. What he stressed was that harsh market interventions, basically like saying, oh, we have to buy oil or gas from one place, will ultimately result in more expensive energy for European consumers and companies. The promise that the EU made means tripling current energy exports, and that would require a lot of moving parts. So there's still uncertainty, and not everyone is happy with how the EU bowed down to Donald Trump, but it seems that's the trend.
Wow, quite interesting. Seeing a lot of bowing at this point. Thank you so much, Varda, there, for giving us details of what's playing out in Europe. Thank you.
Thanks, Laddie.
All right, let's flip over to all the markets that we track. Now, let's get a check on what's playing out in the crypto market. At this point, it's, wow, green. 116,000. Trying to get back to lost levels, and Ethereum, that's leading there, 6.59% up, deep green. With the likes of BNB, that's also in the green, 1.65%. Cardano is also making a run. Let's see if we can get back to $1. SUI, Doge, XLM, most of the altcoins there, not looking bad, just a couple of stable coins. Now, founder of the crypto mixer, Tornado Cash there, that's Roman Storm, has been found guilty of conspiracy to operate an unlicensed money transmitting business in a New York federal court. The jury deadlocked on more serious charges, including money laundering and the sanctions violations tied to North Korean hackers. That's leaving Storm facing up to 5 years in prison on the remaining count. We also see Cardano founder Charles Hoskinson has declared that Midnight's native utility token, Night, is poised to launch as the largest, most traded, and highest volume native token on the Cardano ecosystem. At a rollout, the token will distribute its full 24 billion supply via a cross-chain airdrop dubbed the Glacier Drop, with Cardano holders allocated 50% of Night, followed by Bitcoin 20% and other participating blockchains at 30%. Then, according to Binance August 1st, 2025 Proof of Reserves report, users withdrew a staggering 496,000 Ethereum. That's about 9.84% drop, while 17,000 Bitcoin was added during the same period, marking a clear shift from Ethereum to Bitcoin within the platform's holding there. So that gives you a sign of where investors are moving to when they're trying to hold some of their tokens and withdraw some, and what they're actually trading. So we're seeing Bitcoin there starting to take the shine from Ethereum. Both cryptocurrencies, they've had quite a run, in 2025, but we see Ethereum has not hit highs, just like, Bitcoin. So I guess, investors are still trying to find out if Ethereum would actually find some kind of new all-time high, just the way Bitcoin has, and still in price discovery at this point. So that's how most of the markets we track are looking today for this trade. Thank God it's Friday trade. That's tomorrow. We'll see what the markets hold. That's for tomorrow. But definitely hope you have direction now on where you're stacking cash at this point. Thank you so much for watching. I'm Laddie Williams from the team right here at Channel HQ. It's bye for now.